Hello, this is Asoka Salvaraja of OnlineTradingRebel.com with a trading video for you regarding the Dow Jones Industrials. Now, we're looking at it in January of 2008 and it seems to be poised at a very interesting level. Most people seem pretty pessimistic about it, but it really could go either way at this point, and this video is going to just quickly tell you some of the salient technical features to look for. Now, you're looking at a monthly bar chart, so each bar is a month, and I have drawn a Gann type projection from this low, which was made in October of 2002, and the low was 7,181. And one of the techniques of Gann analysis is to actually project price targets from lows or highs, with the idea that lows create future highs and highs create future lows. So in this case we can see that's really pretty well true, because the low of 7,181 that we were talking about can be used to project what we call a 100% projection. In other words, you simply double that number, and that multiplication of by 2 simply gives you 14,362, and in fact the high came in October of 2007 at 14,279, so well, not very many points away from it, and in fact almost 2 complete calendar years. I'm sorry, not 2, 5 complete calendar years later, which in fact itself is a Gann cycle, 5 years. So you would be looking for a topping out 5 years after a major low at a price level such as this. So then the market trades down, and on a monthly basis it's looking bearish, it's looking miserable. It's got 3 black crows, as we say in candle language. That's 3 down bars in a row. And the upside story to this, the counter story, is that if we just take a look at the trend line through the closes, which is what this is the closing bar chart, just the chart of the closes, we see that we do have a very strong support line, and we are right on that support line at the moment. And if you take a look at these horizontal lines I've drawn, these are again Gann levels, where we've taken the low, we've taken the high, and we've divided it into eighths here. So we're finding strong support at a previous low and at the present time on the 2/8 level, the 25% retracement, which is a retracement that Gann used a lot. And we can do the same thing from this major low here and this major high, and we find 1, 2, 3 eighths retracement here, which is 0.375 or 37.5%, and if you know Fibonacci levels, then you know that this is also 382 retracement, or very close to it. So we do have a cluster of support levels and a strong trend line giving us a support point here. So now let's take a look at the weekly chart. And it's an important one to look at because it once again re-emphasizes the bearish side of the story, because on the weekly chart we have a clear head and shoulders pattern, and if you don't know what that means, it means that you have a high central peak with 2 lower peaks on the right and left hand side forming to give a kind of head and shoulders pattern, and it completes when the trend line is broken, and that actually did take place. So we do actually have a completed head and shoulders pattern on the Dow Jones, which does imply a strong downside target, and I've drawn it in there, of 11,658 more or less. And that is a pretty bleak story, and quite often these patterns do complete. Now there is again an upside to this story. The market is at this moment trading on major support, the former low of August 2007, and that's not all, we'll see more in a minute. But if you also look at the weekly Bollinger Bands, which is something that I look at quite a lot, you'll see that the band has been penetrated and at strong support, and we'll see even more support in the next chart. But whenever the band is penetrated, you do tend to get a strong reaction in the opposite direction, as shown here, and as shown here pretty dramatically. So there is that chance of a upward thrust, at least on the short term. And certainly it does begin to look as if this level is a very crucial level to hold if the Dow is to maintain any semblance of a bull market. If it really does continue to confirm that the head and shoulders has been broken, as has clearly happened, if it does continue to trend lower, then we are looking at 11,658 and maybe even worse. So these are very, very key levels to hold at the moment. So now let's just take a look at the daily chart. And on the daily chart I have drawn in Fibonacci retracement levels from the lows of June and July of 2006 right through to this last all-time high in October of 2007. And interestingly enough, we can see that right now, and I'll expand this, the two troughs we were just looking at are in fact on a strong Fibonacci support level, and in fact it's the 50% retracement level from the lows in 2006 to the highs in 2007. It's the 50%, the halfway mark. So I think you can see that we really do have a huge amount of support at these levels being in the region, well, the recent low was 12,431. And we have the 50% retracement level back to the June-July 2006 lows. We have the previous low coming in as support of August 2007, this low here. And we have, of course, what I showed you on the monthly charts, the Gann type retracement levels from going even further back. Another support level we have is actually generated in a similar fashion to the Gann target I showed you previously on the monthly. Here we take the high and we project down one fixed percentage, which is 12.5% in the world of Gann analysis, and it gives you 12,494. So again, you have a strong support. And if you like this kind of thing, the stochastics are also tending to turn upwards right now for a short-term pull at the very least. And even on the daily Bollinger Bands, we see once again that they are indeed being penetrated at very, very key support levels. So what's the story? Basically, these levels must hold, and these levels being the low of 12,431. These levels really have to hold on the medium to long term if the market is to trade to hold off from being a medium to long term bear market. In other words, this is a good position at which one could put on a trade, a long trade, with a stop below these lows on a weekly basis. You're looking to basically see a significant push through and trading down to lower levels in order to confirm that head and shoulders target that I gave you earlier of, I believe, 11,658. Obviously, just a 20-point intraday push through the low here isn't going to do it. You need to see a real move. A breakthrough of these levels would tend to put you bearish down to the mid 11,000 levels, and that means that you are looking to short the market. But right now it actually looks like a very good buy opportunity with a tight stop below the lows that we're just looking at here. So this is Asoka Selvarajah of OnlineTradingRebel.com, and I hope you found this useful. Please do get a copy of your free report, The 7 Deadly Mistakes of Online Trading, at the website OnlineTradingRebel.com, and we will talk again soon. Thank you.